How many trades should you hold? A question I've been asked numerous times over the last 33 years. How many trades do you hold in a day, Rob? How many trades should I hold a week? How many trades should I take a month? Well, it's up to you. How long is a string? It's not an easy question to answer, but we're going to go over that today, and we're going to talk about how many trades you can hold at one time with any particular account. Can you make a profit in the markets? And do I need to take more than 1 or 2 trades today? What is more profitable, holding 20 trades or holding 1 trade? Let's go over that. Let's discuss that today. For those of you who don't know me, I'm Rob. It's Coffee with Rob. We're having some coffee and then we're going to get to it. But before we get to it, do understand this one very important thing. And that is, trading markets is risky. Insanely risky. In fact, 60 to 80% of traders do lose money trading on normal position trading, trading on a normal regular basis on 4-hour and daily charts. And on 5-minute charts, traders actually, 99% of traders actually do lose money. So if you don't like losing money, you don't like risk, in all likelihood, you probably shouldn't be trading. But how many trades should you take and how should you handle the market? The whole point of trading is this. If you start day trading, and you're trading on the 5-minute charts, the 1-minute charts, and you in that realm of you want to be part of the 1% of winning traders because 99% of traders lose on the day trading and the 5-minute charts, then you want to be taking a lot more trades than a person who's trading on a daily or a weekly basis. Now, why is that? Let's look at the nitty-gritties here. If you take a trade on the 5-minute charts, that's the same risk or the same size as someone taking a trade on a 4-hour chart. You could probably lose that money insanely amount quicker, simply because you are risking on maybe 10 points, and the person trading on the 4-hour might be risking on, say, 200 points on the same product. In other words, the risk on the 4-hour is that much slower. Why would you want to take a risk of the same value on a 10 pip loss over a 200 pip loss? So what actually happens here? If you start taking, let's say you risk $250 per trade, and I'm just using that as an example, it's 1% of your account. We'll go over the strategy and we'll talk about the strategy in just a moment. We don't need charts for this, and you guys have to remember what I've said to you in the last few videos. Separate the charting from the strategy. The strategy is a completely different thing. It's not the charts. The amount of trades you take is also, it's got nothing to do with charting. Why would it have anything to do with charting? It's got to do with how much money you're making in the market. But when you take a trade on the charts, if you're taking the same risk on a 5-minute chart as to what you're taking on a 4-hour chart, then you become a high stakes trader. And if you're new to this and you're starting out, are you ready to become a high stakes trader? Are you ready for that kind of trading? Because now you're taking $250 and you like splitting it over 10 points. Now, just have a look at that on a 4-hour chart and look at how quickly that disappears, those 10 points. So what kind of risk are you prepared to take on the 5-minute chart? So let's say you decide, okay, I'm trading a lot faster here. I'm trading a lot quicker here. So let me reduce my risk to $25. Now that starts to change the game, because now you're only risking $25 because you're trading on a much faster platform. And on the 4-hour, you're risking $250. So in other words, you kind of need 1 trade on the 4-hour and you need 10 trades on the 5-minute chart, which is a completely different game. Now you need lots more trades. So it really does depend also on what kind of trading you're doing. Are you trading fast? Are you trading slow? For example, I could take a weekly trade. I could take a trade on a weekly chart and take 1 trade and make more money than you if you took 20 trades on the 5-minute charts, simply by having one big move on that particular product. One trade, one could make me a lot more money than 20 trades. But the other adage that we've got here is we want to make more on our wins and lose less on our losses, and we want to have more options. And we can't take one trade based on a 1% loss, because we're risking 1% of our account. And if we have a $25,000 account and we only take one trade, we can only make $500. So if we're only taking one trade in a day, that means we can only make $500 in a day. If we're only taking one trade in a week, it means we can only kind of make $500 in a week. So we need to take more trades than one trade. Same goes for your 5-minute charts. How many trades do you need to take to make up the target that you want? So how many trades should you take? And when I say how long is a string, the string is this long. What you need to do is you need to work out for yourself how much profit you want to make. How much profit do I need for a day? How much profit do I need for a week? How much profit do I need for a month? Now, in general, I work my profits over a period of an annual basis, but I do understand that I might like to see $1,000 a day, and that might make me happy. So to do that, I might need a specific number of trades on the go at any one time. And I've been asked many times, how many trades do you have on the go at any one time? And there as well, I might have one trade, I might have 10 trades, I might have 20 trades. I don't limit myself to numbers, and I don't calculate my business based on the number of trades that I have. Some more coffee. But I do base my business on the profits. And to make those profits, I need to have trades. Now, it's very presumptuous of us to think that I'm going to make $200 a day. A lot of guys will come in that trade on 5-minute charts, for example, and say, well, I'm going to come in at 9 o'clock in the morning at the open of the market, and I'm going to trade for 2 hours. I'm going to make $200, and I'm going to be off for the day. Trouble is, you come in presumptuous, thinking I'm going to make $200 a day, and I'm going to win $200 a day, and unfortunately, you lose $400. Now your 2 hours is up. What do? Do you shut down and go for the day? Or do you stay and carry on watching the charts for the rest of the day because you've lost that $400? So you see, it's very presumptuous to believe that you're going to make a certain amount of profit every single day based on anything, whether it be the number of trades that you've got, whether it be because you just think you're just brilliant, or because you've got this amazing system and a win rate, which is useless to everyone. Maybe that's what makes you think you're going to make this money every day. But when you don't make it, what do you do then? Because there shouldn't be a need for a plan B here. It's presumptuous to think you're going to do that. So you need more trades. And the reason you need more trades is because we all know that out of 10 trades, you're probably going to win 5 and you're going to lose 5. And it's 50-50. But you want to make more on the wins and lose less on the losses. So if you only take one trade and it becomes a losing trade, then it becomes an issue for you. And you start following that loss. You start dollar cost averaging that loss. You start moving the stop loss away. Gosh, I actually had a comment from someone who said, there's nothing wrong with dollar cost averaging. I nearly fell off my chair. Nothing wrong with dollar cost averaging. Well, everyone to their own. You will eventually learn that dollar cost averaging is not a great idea, but it's okay. You'll figure that out one day. Maybe not now, but in the future. Dollar cost averaging can only be done in a profit, not in a loss. If you're losing, don't hold on to the trades. You see, we have this problem where we want to hold on to trades by our fingernails when we're losing. But when we're winning, we dump them as quickly as possible. Why is that? It should be the other way around, don't you think? Don't you think that when you're losing, you should dump it as quickly as possible, and when you're winning, you should be hanging on by your fingernails and saying, I want more? Why do we do it the other way around? It's psychological. You see, it's that embedded thing in our heads, that fear that we have, that fear of loss. We hold on to the losses because we somehow believe that we're going to win. We somehow believe we're going to get out of that hole and it's going to get better. But do you know what? It doesn't get better. It gets worse. It always gets worse. Why is it never gets better? I've been in a few trades where I did that in the past. We've all been there. We've all made the same mistakes. It's not like, oh, I'm infallible or anything like that. I've been trading for 33 years, guys. Obviously, I've made the same mistakes. I've been there. Goes into a loss, holding on to the loss, dollar cost average. And there's been a few times where I dollar cost averaged and I got out of it. And I thought, well, this works. And then there's always that one. There's always that one that doesn't work. And it just keeps on dragging you down into the doldrums. And it just gets worse and worse and worse. And it gets more and more and more painful. Because losses are painful. Losses are insanely painful. How many trades should you hold? There's no answer to this. There's no answer to the question, how many trades should you hold? How many trades should I take? Because if you base your trading on that basis, you're not going to win. You're actually going to lose because you're putting your concentration on the number of trades you take. So if you haven't taken, let's say you decide, I need to take 10 trades a day because I want to take 10 trades a day. Now you start forcing yourself to take 10 trades a day, even if there isn't a trade available for you. And the problem with that is you have to wait for the trades to come to you. You can't chase the trades. And the minute you start chasing the trades, that's when it becomes problematic. The only way to trade this market is to wait for the trades to come to you. Then you'll get high probability trades. You see, you trading on lines and systems, the strategy is one thing, but the lines and the systems have to have a trade that looks viable, a high probability trade that's going to come to you where you feel I can take that trade and it's going to be worth my while. Why would you take a trade simply to make up the number of trades you need to take in a day? That's not going to work for you. That's going to be painful. That's going to go wrong on so many levels. You need to only take the amount of trades that you need to take. That doesn't mean you shouldn't be looking for trades in the market. And here's another thing. If you only trade one product, I mean, that's another question I get. Should I only trade gold and, say, the US 500? Yeah, should I only trade gold and oil? No, trade everything. Trade absolutely everything. I always say, if there's orange peels to be traded, I shall trade them because it's tradable. Don't only trade one product. A lot of people will tell you only trade gold and then get used to gold, see how it runs, and then only run on that. Problem with that is if gold's doing nothing at the moment, then what do? How do you make money? And there you can really basically only take one trade at a time. How many trades can you take on gold? You get this? You can't just trade one product. You've got to trade all the products. And if you're trading all the products, then that gives you a wider aspect as to the amount of trades you can take. Because now you're looking at everything. And you're finding trades in amongst all those things that are available to you to trade. Whether it be Forex or indexes or commodities, they're all the same. It's all the same at the end of the day. If you're not using fundamentals, you take the trades and then you simply apply the strategy. And you all know what the strategy is. The strategy is easy. It's all about managing your risk. You all know that I risk 1% of my account on every single trade, the main account. It's up to you how much you want to risk on every single trade, but you've got to keep the risk the same on every single trade. And that's the way to trade. And then try and make more on your wins. Go and look at my other videos and go over the strategy. The strategy is there. And it'll explain to you exactly how you need to trade. And that gives you the edge in the market. But the system, the lines, which we separate from the strategy, gosh, it's so difficult to get this through. You've got two different things. You've got system, lines, probability trade. You've got strategy, how to make the profit in the market. The strategy is risk management, risking the 1%, making more in the wins. The system is choosing a trade, buy or sell. That's all the system does. The system can't predict which way the market's going to go. It'll give you a 50-50 trade. But what it can do is give you a line in the sand and help you to manage the risk and help you to make a decision as to which way you want to go. If everybody was to choose the same way, then the market would be inefficient. The market is efficient because human beings disagree, because we do not agree on the trade we're taking. In other words, we buy and we sell. We buy from each other, we sell to each other. That's a market. It's as simple as it gets. So now you have a system to choose your trades on. But if you only have one product to choose your trades on, you can only take one trade at a time. Not going to do much good, is it? You could possibly on the 5-minute or the 1-minute charts take more than one trade a day on one particular product because they move up and down. But wouldn't it be so much better if you had a whole bunch of trades to choose from and a whole bunch of things going on at the same time? I presume if you're trading on the second chart, it'll get a little bit overwhelming to have too much to look at. But I trade on position trading. And you guys call it swing trading. We used to call it swing trading when it went up and it got to the top. Then we would swing the trade and go down with it. When it got to the bottom, we would swing the trade and go up with it. Nobody does that. So position trading is we take a position in the market, we choose our stop area, we choose our take profit, and that's our position, and we leave it, we come back to it and see what happened. In some cases, we get stopped out because of a spike, and it becomes incredibly frustrating because none of us like to lose. Losing is pain. But when it wins, it's great. Rather than sitting looking at the charts all day and watching the squiggly lines go up and down, I'd rather take a position. I know what my position is. I'll take a couple of trades here and there. I'll leave them in, and I know I've got enough trades that will make me a profit over time, and we'll get there at the end of the day. That's how we do it. That's the easiest way to do it. Don't overcomplicate things. Don't get onto all these amazing, insane, ridiculous systems where the moon is made of green cheese and it has to move to the right 2 degrees before you can take a trade or something to that effect. Really, guys, just keep it simple. Just take a trade when it's there, when it's available. And that's another thing you guys have to learn to do. You have to learn to take the trade when it shows itself. See a trade, take it. It's 50-50. Then just manage the trade. Then the minute you've taken the trade on the system, you've done your job. Your next job is really important. And the next job is the strategy. Manage the trade. Once you learn that they're 2 separate things and then you just need to manage every single trade, that's when you start becoming profitable in the markets. Don't see it as lines. Don't see it as charts. See it as a position. See it as something you can manage. See it as something you can make a profit out of. And it doesn't matter how many trades you've got. It doesn't matter how many instruments you trade. And I wouldn't say trade every single instrument in the market. What I would say is choose a large amount of them that you can work with. There's enough. Start trading 20, 30 of them. Keep an eye on them. Trade with them. If you only trade Forex, that's fine. I wouldn't only trade crypto because crypto is very much the same. Doesn't really change much. Whereas with Forex and indexes and commodities, you get some differences amongst the different products. You get something that you can actually trade on and something you can actually work with. I hope that helps you guys. I hope that kind of answers the question. I don't know if I did answer the question, but the question is, how long is a string? How many trades do you need to hold? Hold as many as you need to so that you can make a profit at the end of the day. You don't have to have a specific number of trades. You just have to have enough trades so that you can make some money at the end of the day. Guys, do subscribe. I hope you've subscribed. And also join the members area for those of you who want something like the trade of the day or the perks or whatever the case that come with the members area. That's all handled by YouTube. And join us for the live shows on Tuesday and Thursday. The live shows, 11 o'clock on Tuesday, GMT +2, and on Thursdays, 1400 GMT +2. For a little bit of fun, join the community, and we can talk about things. You can ask your questions as well, and I'll answer them. I do try to answer everyone's comments, but sometimes it can be a little bit overwhelming and a little bit tricky. Thank you for watching, guys, and I'll catch you on the rebound. Don't forget, keep your feet on the ground, reach for the sky, and I'll chat to you guys soon. Cheers, ciao, thanks for watching, and bye.